Hi everyone, let's go over my medium time frame, low time frame and micro bullish and bearish Elliott Wave scenarios on Bitcoin, starting with the medium time frame bullish scenario where we are looking for a 3-wave corrective structure that is already finished for now continuation to the upside. In this scenario, wave Y is then a zigzag to the downside with the low made just above the invalidation level of this particular scenario, where in this scenario you want this to be a zigzag to the downside, a 3-wave structure in a wave A, wave B and then a wave C to the downside, where now you look for continuation. In this particular scenario, you don't want this to be a wave C to the downside and then an ABC structure, because then you're going to be looking for a wave 1, 2, 3, 4 and another low to the downside in a wave 5. But then you are going to take these lows. Very likely we then also take this low and look for lower prices. If we look at the volume profile, then you can see we have 3 volume profiles, number 1, number 2, and then number 3 over here at the downside. Now, once we lost this volume profile and moved below, then you can see we had a bit of a range, moved to the downside all the way through this volume profile, and we have been ranging just below the value area low of this volume profile over here, and you can now see that price is attempting to get back inside this value area. Now, this can be important because if price can manage to get inside the value area, maybe retest the value area low for then continuation and take this high again, probabilities are quite high to move towards the point of control at 27.9k or even higher, 28.9k, and then we're going to be looking, of course, for higher prices. If price, however, would drop towards the downside and the value area low is not holding, we're going to reach the value area high of this volume profile over here. Now, the value area high has already been tested once, as you can see, so probabilities are higher for this then not to hold, to take the low and potentially move to the downside to the point of control over here at 23k or the value area low at 21.9k. Same accounts for the support resistance area that I have on my chart over here, currently retesting resistance. One can say if you get above, you want to see something like this for continuation. However, if it's lost again, we're going to be looking for lower prices. First of all, again, this as support, or lower prices around 22, 23k. If we zoom in to this structure over here in the bullish scenario, then this is the ABC I've been talking about. So we have a 5-wave structure in a wave A on the lower time frames, a very nice WXY in a wave B, for then a wave C to the downside, a 5-wave move where the 1.618 trend-based fib extension taken from the high to the low of A to the high of wave B has been hit very, very nicely, and that is the low for continuation. Now, the 1.618 is a rare target for a wave C, but a common target for a wave 3. So that is something we have to keep in mind. However, nonetheless, it is a target for a wave C. If we then look on the micro bullish scenario, then this is what we're going to be looking for locally, right? We want to see continuation to the upside. So the low that price made over here then has to be a wave 1 for then a long sideways structure in a wave 2 that retraced to the 0.786 taken from the low to the high of wave 1, which is a common target for a wave 2. However, you can also see that the 886 has been tagged. Now, of course, we did tag it with a big wick and closed above the 786, so that at least is positive. However, hitting the 886 is very deep for a wave 2 and increases the probabilities of the move to the upside being a wave C, which would match the bearish scenario for then another low. So that is, from a probabilities perspective, something that we have to keep in mind. The invalidation of this scenario is, of course, price taking this low. However, you can also see that I have an invalidation at the highs, because if we are looking for a bullish scenario and continuation, we really want price to reach these little candles over here on the 1 hour at about 28k, as that would invalidate a potential wave 4 and then a wave 5 to the downside in the bearish scenario. At the moment, price is at resistance, as you can see over here, the blue target box between 26.4k and 26.5k. If price can manage to move towards the upside, the next area of resistance is the monthly at 27.2k to observe what price is doing there. Usually a minimum target for wave 3 and then a wave 1, 2 and a 3 to the upside is the 1.618. So preferably in this bullish scenario, you really want to see this one hit for then the higher probability of a 3, 4 and a wave 5 for further upside. And what you can also see, and this is of course what I really enjoy seeing, is that price retraced to the target box that I've shown for the past couple of many days it's finds support over here between 25.7k and 25.9k, basically in this area, for then the bounce towards the upside, exactly what we want to see. Now if we then zoom out and we go to the bearish scenario, because we cannot be biased as traders, we need to always be neutral in our stance. We do have a preferred and a alternative scenario, which I will explain at the end, but we always have to consider both sides of the same coin. So the medium time frame bearish scenario is a scenario where we are looking for a move to the downside, where this is then a wave C. So we have then a wave 1, 2, 3, 4, looking for another low to the downside in a wave 5, where price is going to take this low, end up at least highest probability around the 1.618, which is between 23.4k and 22k, for then potentially that bounce and continuation to the upside. In this scenario, around 22k, we have this support area, as you can see, between 21.8 and 22.6k. So that is interesting. And what is also interesting that could support this scenario is that Bybit took this low over here. And as you can see on my Coinbase chart, Coinbase did not take this low. Now usually it's quite nice if the different charts are aligning with the higher time frame highs and lows, so that would then increase probabilities of price moving down to at least take this low over here, potentially move into this target area for then a bounce to the upside. If we then zoom in to this being a wave C, then this is something we could be looking for. So we then have a wave 1 to the downside, a wave 2 corrective structure, for then a 3, 4, 5. Now the longer this range is taking in the bearish scenario, the higher the probability is that this wave 3 is already in and moves to the left, currently working on a wave 4, and then we're looking for a wave 5 to the downside. In this particular scenario, the invalidation of a wave 4 is around that 0.618, which is in this scenario at about 27 or 28k, for then a rejection and continuation. But as long as price is not hitting this area over here, there is always the probability that we are in a wave 4 looking for downside. If we then zoom into this structure over here and we go to the micro that supports this particular scenario, where we are then still looking for a move to the downside in a wave 1, 2, 3, sideways 4, and eventually a wave 5, then over here you can see the same invalidation as shown earlier at about 28k. Now in this scenario, there is two important areas for a wave 4 to reject. One is where we are right now, which is the target box that I just mentioned over here, the blue resistance area, and the other one is around the monthly that I've also shown earlier at 27.2k, which is between the 382 and the 0.5, which is a common target for a wave 4 to reject and then continue to the downside. If price continues to the downside, then the wave 5 target area over here is around that key area at 24.7k, which then is this low over here. So that works very nicely for then maybe a liquidity grab and a bit of a move towards the upside. Of course, it all depends on how price is pushing over here, how far it goes, and the impulsivity of this move to the upside. If we then zoom in to this structure over here, then what we are looking for in the bearish scenario, actually the folder is named wrong, it's local bear, we are looking for a bit of a move to the upside still for either a Y or a wave C, for then a rejection to the downside. So this first move to the upside is then a wave A or a wave W, followed by a B or X, and then we want to see a Y or a C. Now inside this wave Y, we are then looking for a zigzag to the upside, where the most common target is between the 1 and the 1.236, which is between 26.6k and 26.8k, which also is in between the 0.618 and the 1.236, which is a common target, for a wave Y. Now if we are looking for a wave C, then this is a wave A to the upside, a wave B, and then a wave C is a 5-wave structure to the upside, where the most common target for wave C is in between the 1 and the 1.236, sitting between 27.1k and 27.5k, which is in confluence with that monthly that we have over here at 27.2k, and also with the bearish scenario, right, for the high of a wave 4, with the 382 and the 0.5 being around this area as well. Now if we look at the CVD divergences and we zoom in more locally, then basically over here in this area there weren't too many CVD divergences. As explained earlier in the live stream, we had bearish CVD divergences over here. Very, very nice for then a move to the downside to reach the support area that I had over here. But we didn't really have any bullish CVD divergences here at the lows or very locally. We had to wait for price to show us what it got. Now, of course, what it got. Now we had bearish CVD divergences basically between this high and the lower high here, which I will show in a second, but I always prefer to look at CVD divergences on the right side of a new high or a new low, and there weren't any real bearish CVD or bullish CVD divergences until price was about here. Now you can see we had bearish CVD divergences, but it got countered by the bullish one for then a flyer to the upside. So if we zoom out and I go to the 15-minute, you can clearly see we had over here lower highs on price, higher high in yellow, bearish CVD divergence. That one played out. Then price moves up again, and you can see the yellow line moves up very, very quickly. First of all, the CVD divergence over here with this move to the upside is the second time you get a divergence with the same pivot, which lowers the probabilities of this second bearish CVD divergence to play out, but also because of the impulsivity and the volume, it's also good to wait for more local like 1 minute, 3 minute CVD divergence and not look on the 15-minute over here. But then more locally, if we go to that 3-minute time frame, and I zoom in, then over here you can see lower highs on price, but the yellow line kept increasing. But then what happened is that even more locally over here, we had a higher low on price, but you can see a lower low on the blue CVD and also a lower low on the yellow CVD. It's very cheeky, right? We had bearish CVDs countered by the bullish one, and in a bullish market structure like this, where also volume was increasing as price is moving to the upside, that bullish one gets a bit more weight. Now at the moment, we are in that resistance area. There's no CVD divergences here locally. We really have to wait and see what price is going to do in this particular area. Now if we then zoom out and we talk about the probabilities of the different scenarios, then as long as the bearish scenario is not invalidated over here with the invalidation at 27.8k, the bearish scenario from an Elliott Wave point of view still has some higher probabilities. However, more locally, and this is what for me is important, I don't really want to look at the medium time frame at the moment and the more like higher time frame scenarios. What's important for me is what is happening locally over here. If this is a wave 1, 2, 3 and we keep pushing and we reach the invalidation level of the micro bearish scenario over here, well, clearly we are going to be looking for upside. However, if price is rejecting at the blue resistance area or higher around the monthly level, and we start to see some maybe bearish CVD divergences, bearish price action, and volume also decreasing and maybe increasing to the downside, changes in market structure, then we can think about the bearish scenario to the downside. I hope this video was helpful or valuable to you. Please check out the most recent educational video I've made about the best trading indicator you can use in my opinion, which is the CVD. And for now, thanks for watching and subscribing, and I'd like to see you at the next one. Bye bye.